Good morning, everyone, and thank you for joining us today in this webinar titled Essential Ways for Efficient International Trade. This webinar is organized jointly by the Bahrain Chamber of Commerce and Industry and Bahrain Institute for Finance and Banking, for Banking and Finance, BIBF. Allow me to introduce myself. My name is Aisha Ibrahim. I am from the Bahrain Chamber's team, and I will be with you in today's webinar. With me here is our guest speaker for today, Dr. Chitra Suresh. Dr. Suresh is a faculty member at the BIBF from the banking department. She's an expert in financial market research and portfolio management and holds a PhD in economics. Today, Dr. Suresh will shed light on the following topics: how to identify potential markets for export, how to create export strategy, the contracts and documents needed for international trade, finance and insurance requirements, and trade map and risk analysis. At the end of the session, there will be a question and answer time for you. You may address your questions directly to Dr. Suresh by raising your hand, or you can write them in the chat box. Without further ado, allow me, and now I will leave the floor to Dr. Chitra.
Hi, everyone. A very good morning and a warm welcome to this webinar. I'm Dr. Chitra. And first of all, I would like to thank BCCI for giving us this fantastic opportunity to share our ideas on how we can make international trade effective. Before I start, I would like to give a brief introduction about BIBF. I'm very sure you must have heard about the Bahrain Institute of Banking and Finance. We are a leading provider of training and education and professional development. From our inception way back in 1980, we have marked our presence in the MENA region. Through our quality education, we have got our own place in the market. We have partnered with many recognized institutions globally. I'm sure you know more than me about Chamber of Commerce. The Chamber of Commerce is the main representative of the Bahrain private sector. And from its establishment in 1939 onwards, the Chamber has played a very significant role in the economic and social growth and development of Kingdom of Bahrain. So today's topic and the presenter, thank you, Aisha. It was a very glorified introduction. I hope I can do justice to and raise to your expectations. So basically, I'm an economist and I'm a trade finance specialist too. So hopefully there will be a lot of discussion about how to make international trade effective in today's webinar. We all know that international trade is very important. Let us see what Martin Luther King has said. He has summarized his views on international trade in this quote. Before you have finished your breakfast this morning, you would have relied on half of the world. Isn't that true? Let's think. Have you ever wondered, the toys that your children are playing, or it is designed and manufactured? We watch a lot of videos on YouTube, and at that time, we are least bothered about who has got the intellectual property rights on these videos. There can be more than one owner of the videos, and from which country it has originated from. This is about business. Let's take our typical day. You wake up to an alarm clock made in Korea. You pour yourself orange juice made from Australian oranges, and the coffee is grown from Brazil. It has brought to your country from Brazil. You put on some clothes which are made in cotton in India and soon in factories in Thailand. We watch over the morning news broadcast from London on our TV, which is made in Japan. You drive to work in a car made of parts manufactured in a half dozen different countries. And we have not been up for more than 2 hours yet. So our life would be in a complete standstill if there is no trade. So international trade is very, very important. Many a times we have heard businesses telling us that our domestic market is saturated. We need to cross the boundaries, right? But they are hesitant. Why? Because there are lots of risks perceived in international trade. The salient features of international trade makes it different from domestic trade. For example, when you deal in international trade, the buyer and seller, they may be residing in different countries with an added possibility of different time zones, and they may be speaking different languages. Obviously, they will be contracting in different currencies. There can be a lot of foreign exchange regulations. They may be operating under different legal traditions. Some may be following Roman law, some may be following Napoleonic law, some may be following Arabic laws. So you may not be knowing them. Then they may have different business customs, practices, different cultural and philosophical backgrounds. Last but not the least, they may not be knowing each other also. So it's very, very important for us to make our international trade decision very effective. Maybe when you decide, yes, I want to cross the boundaries, then your friend or your business partner must have told you, dear, you want to business internationally, but let me tell you, in trading internationally is too risky. You may not get paid because getting paid is very cumbersome. And some might have told you exporting is very complicated. Some they don't want to take the risk. So they limit themselves by saying, my domestic market is very good. I don't want to take extra risks. Or some might have told you, no, this market, our product is too small. We can't go globally. Maybe some must have told you, like, look, you are not good at foreign languages, so how will you break the barriers? So these are some of the myths about international trade. Why these myths have taken a prominent place in the minds of the traders? Let's look at a scenario. How the contract of sale happens in a normal situation. The exporter and the importer, they are divided, they are in two corners of the two sides of the globe. The importer and exporters are contacting. So the importer says, if I pay, will you ship the goods? Then the exporter, he may say, if I ship the goods, will you pay? Great, both are happy. So the exporter and the importer, without much details, they don't know about each other. They haven't done appropriate research and they sign the contract. The exporter is shipping the goods and the goods have reached to the ports of the importer. When he tried to take the ownership of the goods, there are n number of issues are confronted by him. Some of them can be, I'm very sure those who have involved in international trade, you must be familiar with some of these problems. Description not consistent, bill of lading notifying party is incorrect, there is no license for this product, you need to have a license, but you don't possess a license, the good description is incorrect, bill of lading is lost, there is no insurance coverage, port is incorrect, you haven't paid the freight charges, big ops, so there are so many problems. Now, what will the official bodies who are acting as the intermediary between the exporter and importer will definitely ask them, did you not collaborate properly? The statistics, the world statistics prove that 60 to 80% of the export document presents do not comply and they contain errors, thereby delaying the payment or refusal by the importers, because the sales contract says what it means and it means what it says. So the objective of this webinar is to overcome some of the difficulties that we have identified in the above scenario. So at the end of this webinar, I'm sure you will have a very good understanding about how to do the export and import business. What are the delivery terms? What documents need to be prepared if I want to trade abroad? How to handle the payment risk? What are the government policies and the support available for me as an exporter or importer? What are the current business opportunities? The world has changed due to COVID. So what is the trade landscape post-COVID? This webinar has got the following outcomes. I'm sure at the end of this webinar, you will have a great understanding about how to research the potential markets for export and the role of Chamber of Commerce in exporting, how to formulate an export strategy to enter an overseas market. You will have a great understanding on international contracts, how to do the proper documentation, Inco Terms 2020, and key export terms which you need to know. And we will also touch upon financing and insurance requirements, which have changed in the post-COVID situation. So we will talk about that too. And at the end, we will sum up with how to convert the threats and weaknesses into opportunities and strengths through analyzing the trade maps and identifying the proper risk mitigation techniques. So when you are going to trade internationally, the first and the foremost step is identifying the risk. Risk analysis is very, very important. You need to identify the perceivable risks when you trade internationally. PESTEL is a tool that is normally used by businesses all over the world before they sign the contract. Through PESTEL analysis, you will get an idea about the political, economic, social, legal, environmental, technological risks that you may confront in the exporting or importing countries. So what are the political risks when you are going to trade internationally? You are not sure what are the bilateral and multilateral contracts that the whole country has signed in. Maybe the country with whom you are going to trade, they are having a very constrained relationship with one of your trading partner. So that can have an adverse impact on your trading. You have signed the contract and afterwards the government may pass a law which prohibits, completely bans trading with that particular country. So you need to make a proper political assessment of the country that you want to trade with. Secondly, economic factors. What is the exchange rate in the country that you are going to trade with? Are you going to be paid in your local currency or in the foreign currency? If you are going to be paid in the foreign currency, then you need to check whether the country's currency is pegged to US dollar or not. Because we all know that in Bahrain, our currency is pegged with dollar. So any changes that may happen to dollar's value is going to affect your paying position. So you need to look at the exchange rate, how the exchange rate is determined. After that, you need to check the inflation rates in the country because inflation rate naturally will take off all your real benefits of trading. If the inflation is very high, that is going to have an adverse impact on your returns. Unemployment rate in the country, the economic scenario in the country, it's very important for you to understand before trading with that particular country. Social factors. Definitely, social factors also affects your trading. What are social factors? As we discussed earlier, social factors means religious belief, ideological differences, cultural differences that may be there with a foreign country. For example, haggling. What is haggling? Haggling is bargaining. Bargaining is a normal act in the Asian countries. Coming from India, I know if you don't bargain, people will think that you are a naive person. So bargaining is accepted in the Asian market, but bargaining is considered as an insult in other countries. That makes the manufacturer will think that you are insulting his intellectual rights by bargaining with him. So social factors are very important. For example, in the Middle East, there are so many products we consider as haram. Some are considered as you cannot indulge in those transactions which are prohibited by Islam. But this kind of an understanding may not be there in other countries. So before trading, we need to look at these social factors. We need to look at the technological factors also. Maybe you have imported a technological know-how or a technique from another country, but your country has got passed a law which is prohibiting the use of that particular technology. So you need to know what are the impacts of importing or exporting a particular technology by looking at the recent development that has happened in the technological field in your country as well as in your exporting country. Environmental. Thanks to globalization, our life has become very easy, but it has also come with a lot of demerits, right? Global warming up, climate change. So we all know that now many countries are focusing on sustainability. So sustainability comes with environmental protection. So there may be some rules that will prohibit, use of plastic. So if you are exporting or importing toys to other countries, there is a content of plastic, batteries, etc. So you need to understand what are the environmental rule changes that may come up in the country. So you need to be proactive rather than reactive whenever you are dealing with an international client. Legal factors, obviously. There are so many rules in which you may not be aware of in the foreign country. For example, there can be minimum wage rules. There can be rules for the composition of certain factors, health standards. Such rules may be there in other countries which you are unaware of. So unless you know these factors, you will end up with a lot of bottlenecks in your trading. So you need to understand the problems in hand before venturing into international trade. So as I said, risk analysis, analyzing the risk, identification of the risk. Then you need, once you identify it, you need to quantify the risk by making an appropriate risk assessment. You need to evaluate the risk and you need to take risk mitigation techniques when you are indulging trade internationally. So once you have decided, yes, I'm going to trade internationally, then the next step is after you have looked at the external factors that can create bottlenecks in your trading, the next step is researching the market. What is researching the market? All businesses needs to do research of the potential markets. Research is very, very vital, whether it is import or export business. There are so many facilities available for the exporters and importers when you are doing international trade. Government departments, for example, in Bahrain, we have got Export Bahrain, we have got Bahrain Chamber of Commerce, we have got so many banks which assist the exporters and importers in their trading. So you get all information about the countries when you approach the government departments, because country risk analysis is very, very important. And you as businesses, that's not your forte. So you want to know about the perceivable risks in the country that you are going to trade with. So you can approach the government departments. They will provide you with details about the country, about the product, what documentary requirements are there when you are exporting internationally. The second source is Chamber of Commerce. So Chamber of Commerce plays a very vital role in the international trade of the country. If you look at the Bahrain vision for 2030, it is focusing on three important factors: sustainability, competitiveness, and fairness. So if you look at the Bahrain's economy, more than 100% of our GDP is from trade. So trade plays a very, very significant part in our GDP. So it's very, very important for us to seek help from these government organizations like Chamber of Commerce, who will help you in the documentation, getting information about your trading partners, country analysis, making the documentation work smooth for you. The third source when you want to research a foreign market is trade missions, exhibitions, and shows. Chamber of Commerce normally assist you in this trade missions. What is trade mission? Basically, the businessmen from many countries, foreign countries, they will visit the countries and they will organize, trade exhibitions. So they will share their experiences, they will inform you, they will preempt you what are the bottlenecks, what they have faced, or what are their success stories. So you can listen to them and you can kind of incorporate them in your contract and also in your trading. So Canon Fair, which is a very famous Chinese exhibition, that is the countries or the businesses all over the world participate in them in order to garner information. Banks provide a lot of information whenever you are trading internationally. We will talk more about banks when we will look at the financing opportunities available for you when you trade internationally. But banks, apart from providing financing, if you want to know about the pricing, you want to hedge the exchange rate risk. We said that, I hope you remember earlier when we were looking at the exchange rate risk, I said that there can be scenarios where you may be paid in a foreign currency. So when you are paid in foreign currency, the appreciation and depreciation can have a sometimes beneficial or sometimes adverse impact on your trading positions. So banks can help you in mitigating this exchange risk. Banks can give you information about the country. They may have correspondent banking relationship with the country that you are planning to trade. So they can give you country reports also. Apart from banks, there are credit reference agencies whom you can approach. For example, Dun & Bradstreet, they provide you information about the potential export market, what is the new product that will be demanded in the near future. For example, palladium or platinum, you want to venture into this market, but you don't have good information. You can approach these reference agencies who will give you a good report on what has happened previously to the prices of these products and how they are expecting the prices to change in the future. Credit rating agencies also provide a lot of information. For example, S&P, Moody, and Fitch, they analyze the country risk and they give a rating of the country. The businesses, that's not your forte, or you may not have time to analyze the country. So you need to just look at the rating given by these rating agencies, which will give you a snapshot of what you can expect in the country that you are interested in the future. They rate the countries as investment grade countries or below the investment grade. Sometimes they rate them as junk also. That's a red flag for you. Okay, I shouldn't be trading with this country. So, there are a lot of information given by the credit rating agencies, and there are insurers also. See, in Bahrain, if you look at it, the Bahrain Export has got fantastic programs on credit, export credit management. I'm sure you must have heard about the Daman program, which is introduced by the Bahrain Export, that gives you almost 90% of export insurance. So in Bahrain, we know it's export Bahrain. If it is France, you have Cofes. If it is UK, you have Atradius. So there are so many credit insurers whom you can approach whenever you want to have taken appropriate insurance policy. Then obviously the internet and the media also provide you a lot of information, but a cautionary note, we need to be very careful when we are going to trade internationally just based on what we see in the internet and the media. We need to filter these information. The last but not the least, networking. Yeah, networking is normally arranged by the government departments and chambers of commerce. They will be conducting, a lot of events where you can meet people, meet businesses, and share your feedbacks, get their experience. That will play a very significant role in your research. So once you have completed your researching, then you need to decide how you are going to enter the overseas market. There are two ways of doing it. The first method is direct exporting, eBay. eBay is a direct exporting. So what you can do is you will directly export to your ultimate customer. It's the fantastic method, but it comes with a lot of disadvantages. Scenarios can be there where you don't know about the country. There can be so many risks. As a result, you may end up with a lot of bottlenecks or failures. So if you do not want to take that risk, then you can go for indirect exporting. How is indirect exporting done? You can appoint an agent or a distributor in the foreign country. The advantage is that the agent or the distributor, they know the nitty-gritties of their country. So they know how the export should happen, import should happen. So they have got all information about their country. So you do not have to spend time on much of the research. So you can either go for an agent or for a distributor. So you need to decide how big is your firm. Can you take care of these formalities? So once you decide, okay, I'm going to go with the distributor, there are a lot of advantages. And if you decide, no, the disadvantages are more than the advantages when it comes to distributor, because you have sold your goods to him. So you have lost the ownership of your goods. So if you want to go for an agent who will work on a commission basis, that is also a good opportunity. So as a business, you need to decide what are the cost implications of this decision, and then you can choose either an agent or a distributor. Another method of entering an overseas market is through joint venture. What is joint venture? You come to an agreement with a company in the foreign country that you want to trade with, and you have an agreement with him, and you jointly sell the product. So joint venture is normally taken by the big firms in order to avoid taxes. And many times there are some, all countries are nowadays following protectionist methods. There are tariffs, quotas are imposed. So to circumvent these issues, you may end up with a cooperative agreement with a partner firm in the foreign country through a joint venture. So another opportunity that is available for you when you want to enter an overseas market is through international licensing or franchising. There are certain products, it's important that you need to have a license. So you can get license from the party, and it can be for the production or for selling. So international licensing is also a way of selling your products in the foreign country. Obtaining this license will help you. If you do not want to just get a license, then you can go for franchising. Franchising is you will be adopting the business model of the franchisor. For example, McDonald's in Bahrain. So what will happen is when you go for franchising, you have an added benefit of the company, the franchisor will share with you their business model. So they will help you in setting up your firm. They will help you with all the legal and the production requirements. So they will be there, to help you whenever you are confronted with problems. So these are the different methods you can choose depending upon your size of the firm, depending upon your cost, depending on your objective. Like if you want to have sales maximization, sales revenue maximization, cost minimization. So based on your objective, you can decide which method you would like to choose when you want to enter an overseas market. So once you have decided, yes, this is the country that I am going to trade with. Now you have found your prospective buyer or the seller. Now you need to enter into a contract. So contracting is very, very important. And if you take certain necessary steps while signing the contract, that can kind of avoid so many problems that you may come up in the future. At the negotiation stage itself, you need to understand what law will govern the contract. For that, you need to know the differences between the English law, French law, Arabic law, etc. So you need to understand that. And when you are signing your contracts, please bear in mind that in order to be considered as a valid contract, there must be a firm offer and there must be an acceptance. Then you must have an intention to create a contract, and there should be some considerations. And there must be a capacity to contract also. You should know about the CR, the set out rules as per the contract. The consent must be freely given. It should not be any duress or based on some false information. And the purpose of your contracts must be legal. So when you are signing a contract, make sure that you have all these information in your sales contract. First and the foremost, the currency that will be used in the trading, exact nature and the quantity of the goods, price, packing requirements, inspection, quality control requirements, insurance requirements, what are the shipping terms to be applied, the date by which the goods have to be dispatched and to be delivered, and the method and timing of the payment, and at what point the risk will be shifted from the exporter to the importer, how and when the ownership will pass, and all these information should be included in the sales contract. So normally, all the contracts are governed by the CRSG rules. What is CRSG rules? CRSG rules are the contracts for the international sale of goods. There are only, as of today, 89 countries all over the world have ratified or they are members of this contract. Only 3 countries haven't signed this contract. They are India, South Africa, and UK. So whenever you are trading with these 3 countries, you need to make sure that what will be the law that will govern if there is any dispute between the parties. So normally a pro forma invoice would be looking something like this. Okay, this is a pro forma invoice that I have given. So quickly, if you look at it, I have given informations like an order, supply and shipment of what you are supplying, where it is originated, what are the packing details, what is the total cost, what is the Inco terms that is used.
Yes.
Which bank is involved in this, etc. So this is how a pro forma invoice normally look like. So when I was talking about the sales contract,
Okay.
So I'm sure when I was talking about the sales contract, I talked about Inco Terms. Currently, the Inco Terms versions that should go in your sales contract is Inco Terms 2020. This is the latest version that has come into being on Jan 1st, 2020. So the Incoterms are international commercial terms. The International Chamber of Commerce have developed the Incoterms. So what is Incoterms? How Incoterms is going to help you? See, Incoterms covers the risks, responsibilities, and the cost involved in the sales. Okay, so by quoting the appropriate Incoterms, then the message is given to the exporter and the importer that the person who will bear the cost, the person who has got the risk, and how and when the risk will be transferred, and what are the responsibilities of each parties. There are 11 Incoterms. So how the Incoterms are classified is the Incoterms are classified based on the mode of transport. So when you are going to export your goods, for example, from Bahrain to UK, you can use either the sea route or the air route, right? But from the let's take the example of Alba. If Alba has got a contract to ship the product from Bahrain to UK, first the Alba has to arrange a local transport from their warehouse. The goods have to be shipped, goods have to be transported to Mina Salman port. From the Mina Salman port, it has to go to the Heathrow. So there are, or Southampton, whichever port that is agreed between the parties. So in this transportation, there are so many risks. There can be transit risk, there can be commercial risk, there can be collusion risk. There are so many risks. So by opting an appropriate Incoterms, you can kind of reduce many of these risks. So based on the mode of transport that you have agreed, whether it is multimodal transport or sea and waterways, you need to choose appropriate Incoterms. There are 7 Incoterms if you are using a multimodal transport. The way I have ordered them: XWorks, FCA, CPT, CIP, GAP, GPU, and GDP. The way I have ordered them, the exporter's cost, risk, and the responsibilities will be increasing. If you look at it, XWork is the cheapest for the exporter, and GDP is the costliest for the importer. So obviously, for the importer, XWorks is the costliest and GDP is the cheapest. So based on the bargaining position of the two parties, they can choose which Incoterms that is suitable for their business. So if you want to have, if you expect the exporter to take insurance, you should go for CIP in the case of a multimodal transport. If you are going to use containerized cargo and the freight charges are paid by the importer, then you will go for FCA. If you want to if the exporter cannot take the import duties, or he doesn't want to pay the import duties, then he shouldn't be choosing GDP. So depending upon the exporters and the importers' bargaining position, their place in the market, the Incoterms will be chosen. So these are the 7 Incoterms when you are going to use the multimodal transport. Sometimes we decide that we want to, the mode of transport is seaways or waterways. In that case, we have got only 4 Incoterms: FAS, FOB, CFR, and CIF. If you want the exporter to take insurance, but here I will warn you, what the insurance the exporter takes is a minimum insurance only. it is just 110% of the cargo. This is the only insurance that the exporter will be taking. So if you expect more risk for the cargo during the transit or after the transit, then you need to have appropriate insurance for you. So some countries have got some regulations in this respect. For example, in Oman, no bank will provide you financing unless the importer has got his own insurance. So some countries have got such requirements. So you need to look at these requirements before you decide the Inco terms. So the Inco terms largely determine your cost, the freight charges, and the your responsibilities, where it starts, where it ends. It will be decided by the Inco terms. But mind you, Inco terms do not transfer the ownership of the goods. Ownership of the goods transfer from the exporter to the importer through documents only. So there are lots of documents required in international trade. That is what makes international trade very, very complex. If you are trading within the country or domestic trade, you may not need so many documents. But in the case of international trade, documents play a very significant role. That is why many are hesitant to venture into international trade, because compliance is required with respect to the documents. There are a number of documents required for the international trade. There are documents for the delivery of the goods. There are documents which determines how and when the risk will be passed from the seller to the buyer. Then there are documents for who would clear the customs, and there are documents for insurance. There are documents for there are many commercial documents, official documents can be there. So documents play a very, very significant role in international trading. If you have taken a financing for your international trade from the banks, then the banks deals only in documents. They don't deal with the goods. So it's very important for you to make sure that your documents are compliant. So preparation of the documents play a very, very significant role in international trade. So in order to prepare a fault-free documents, you need to know what are the features of each of these documents. So let us see what are the documents normally required in international trade. If you have got appropriate, fault-free, compliant documents, then half of the work is done. Nowadays, there are so many consultants, there are so many shipping companies who helps you in preparing this documentation. But end of the day, the businesses need to have a good understanding of the documentation, because you can't 100% rely on the third parties, because some of the documents are required that the beneficiary, that is the exporter, needs to prepare them. A third party documents may not be acceptable. So you need to look at the documents, and you need to have a good understanding of the documentation in international trade. If it is done, then half of your work is done. The principal documents that are required for successful international trading is financial document. Of course, we want to get paid, right? If it is a domestic trade, payment can happen through checks. Normally, in international transactions, payments are done through bills of exchange, drafts, or bank-to-bank transfer. So you need to understand what makes a financial document fault-free or compliant. For example, a bill of exchange, it has to be signed, it has to be dated, it has to be written, it should be negotiable, and it requires an endorsement. So you need to have good understanding of the financial documents. For example, in Bahrain, if any of these financial documents, if the amount in words and figures do not match, then the banker will return the document. This is a rule imposed by CBB. The words and figures must match. Otherwise, the banker will return the financial instrument. So you need to be very careful when you are drafting the financial document. And sometimes your client will ask you, can you get me an avalized draft? So why sometimes the client asks for avalized draft is that maybe the client has got some doubts on your credit risk, so that he wants to mitigate this risk. So he would ask you to get your bill of exchange avalized by, stamped by a bank. That's what is called avalization. So when a bank puts their stamp on the bill, they are giving an assurance to the exporter in the foreign country that if you do not pay, then the bank will pay. So you need to understand how you can get such avalized draft. In order to have that, you need to have a credit line with the bank. The bank will do their due diligence. You need to satisfy the KYC requirements. Banks normally do the risk-based due diligence when they provide such credit facilities for their customers. So if you want to get these facilities, you need to have a good understanding about how these documents are prepared, because in international trade, very seldom the clients accept checks. Checks can be a mode of payment domestically. Then comes the commercial documents, commercial invoice. Those who are associated in international trade know that normally you get the commercial invoice many a times stamped by the consulate. The customer would ask you to get your commercial invoice stamped by the consulate in the country. That gives them a lot of assurance. So commercial invoice is different from provisional invoice or pro forma invoice. If you have a pro forma invoice, but when you send the goods, what you need to send along with it is commercial invoice. So a commercial invoice will be providing goods description, and this goods description should be accurate. Apart from that, you may also have to prepare packing list, weight list, etc. Make sure that the details you have given in the packing list and weight list, they can be in general terms, but they should not conflict with the commercial invoice. So commercial invoice is a very, very important document which is prepared by the exporter, and it is addressed to the importer. So it's a document which is prepared by the exporter. However, in many cases, the client would ask you to get it visaed also. So you need to make sure that there is a consulate or an official body is stamping on your commercial invoice. Then you need transport document. As I said, many a times we choose multi-modal transport document, multi-modal transport. So depending on the type of transport that you have opted, you will be given either a negotiable transport document or a non-negotiable transport document. So what's the difference between negotiable and non-negotiable? Negotiable means unless you as an exporter, you endorse on the back of the transport document, the ownership of the goods will not be transferred from you to the ultimate buyer. So negotiable transport documents are good for the exporters. If you do not want the ownership to be transferred, then you will not endorse it. Unless you endorse, it will not be transferred. So the negotiable, there is only one negotiable transport document, which is the bill of lading. So bill of lading is normally used when the mode of transport is seaways. If you have used airways, then an airway bill will be given. When you are issued, when you are using multimodal transport, then a multimodal bills will be, transport documents will be issued, truck receipts can be there, railway receipts can be there, courier receipts can be there. All of them are considered as transport document, but they have got certain features which you need to understand. When a transport document is issued, make sure that the boxes are filled correctly. There are 4 parties in a transport document. There can be, there is a carrier. Carrier is the shipping company or the transport company. There is the consignee. Consignee is the party to whom the goods will be transferred. That's the ownership of the goods will be transferred from the exporter to the consignee. Then there is the shipper. The shipper can be the exporter, he can be the producer, he can be the manufacturer. Then you have a notifying party. A notifying party is the person who will be informed about the arrival of the goods. So when you get a transport document, make sure that all these boxes are filled. And apart from that, there are some requirements for signatures, and the carrier name should be there, who should sign, who can't sign. So there are a lot of nitty-gritties involved in the transport document. So as a international trader, you need to understand what are the prerequisites you need to tick when you get the transport documents. So transport document, as I said, they are the ones which transfer the ownership of the goods. So they are a very, very important document in international trade. That is why when you lost the transport document, you know, the goods may be lying in the port. The goods have already reached the ports, but you can't take ownership of the goods. So if the goods are lying on the port, then you have to give demurrage charges, which are the charges imposed by the customs. So in order to release the goods in the absence of a transport document, you have to run around, you have to ask your bank to issue a shipment guarantee. And against that, the bank will issue a counter guarantee. So, you know, it's like a lot of issues you may confront. If it's a perishable goods, then if you can't get the goods on time, then, you know, if the goods are damaged, then that will create a lot of losses for you. So transport document is very important. And when you get the transport document, make sure that all of these details are clearly incorporated and you are aware about the potential risks involved when the transport document becomes discrepant. Official documents, apart from the commercial and financial documents and transport document, there are many official documents. For example, certificate of origin. The Chamber of Commerce normally stamps on the certificate of origin. Why we need certificate of origin? Because we need to know the origin of the goods. We all know that there can be sanction rules. Some countries are prohibited from trading with some countries. There is a bilateral or trade agreements prohibiting a free movement of goods and services from one country to another. So in order to know the origin of the goods, we ask for certificate of origin. However, here I want to add a very pertinent point, which is if you are asking for a certificate of origin, make sure that you add in your sales contract a certificate of origin issued by an official body. If you simply state a certificate of origin, then it can be issued by the exporter. If you want the Chamber of Commerce of that country to stamp on the certificate of origin, you need to add the word official or independent. If you add the word official or independent, then the exporter cannot sign on the certificate of origin. It has to be stamped by the Chamber of Commerce. So you can ask for such official documents, licenses, inspection certificate, health certificate. Many a times, you know, especially now with this pandemic situations, post-COVID, there will be more requirements with respect to health certificate, quality certificate, phytosanitary certificates, etc. Phytosanitary certificate is something which I'm expecting will be part of each and every contract. What is a phytosanitary certificate? It's a certificate stating that no pesticides or fertilizers are used in the manufacturing. This will be a requirement hereafter after this pandemic situation. So there can be health certificate, certificates of quality, certificates of quantity, etc. Make sure that when you ask for such health certificate, quality, quantity certificate, you always add the word official or independent or competent against that. If you do not add it, then the inspection certificate can be signed by your exporter. Then the purpose of the health certificate or an inspection certificate will not be there. What is the point? If I am the exporter, I'm signing that, all the requirements are met in the production. You don't want to have something like this, right? So you need to add the word health certificate issued by a competent authority or an official authority. The moment you add this, then the exporter cannot issue such certificates. Insurance certificates or insurance documents. Normally, insurance are there to protect you from commercial risk, credit risk, country risk, repudiation risk, etc. So insurances are of different types. You can ask for insurance policy, insurance certificate, open cover, etc. But make sure that you don't ask for cover note, or if the exporter is submitting an insurance cover note, it should not be accepted, because a cover note is mere an acknowledgement of insurance. The best one is insurance policy. So when you ask for insurance, make sure that there is a minimum insurance of 110%. A mandatory requirement in all countries is that the insured amount should be 110% of the sales value. So the best insurance is insurance policy. Insurance document is insurance policy, because that is negotiable and it is auctionable too. Insurance certificates are also accepted unless, there is a trust between the parties. They don't normally accept insurance certificate. Open covers are also taken. For example, an exporter like Alba, who may have mass production and they may be dealing with a lot of countries, what they normally do is they take an open cover insurance and they issue insurance certificate against each of the consignments. So depending upon your relationship with the exporter or the manufacturer or producer for that matter, you can decide what type of insurance document you will ask for. But the best is insurance policy. And also make sure that who has signed the insurance, and the insurance should have a validity also. The insurance should be dated on or before the shipment. This is also a mandatory requirement. If the date on the insurance is after the date of shipment, then that is a discrepant document, because your goods are in transit without any insurance. So if in the event of loss, you will be losing everything. Apart from this, you need to make sure that your insurance document is issued as per ICC Clause A. What is ICC Clause A? ICC Clause A covers all risks. What are the risks? There can be a lot of risks involved in the during the transit. So having an ICC Clause A insurance policy mitigates these risks to a great extent. So ICC Clause A covers all risks. So if in the sales contract, it is stated that you would like to have an insurance policy covering all risks in inverted commas, in that case, we will go for ICC insurance policy of ICC Clause A. If you are submitting a certificate, then it would be a discrepancy. It will not be accepted by the authorities, or in the event of losses, that's not going to help you. So you need to make sure that you have got an insurance policy for a minimum of 110%, and it covers all risk, and You can decide whether you want to have a general average or particular average. You can also have an excess or franchise in your insurance. So all of them will try to mitigate the country risks, credit risk, and commercial risk that you may confront when the goods are transported from the exporter's country until it reaches the importer's warehouse. So the best insurance policy would be warehouse to warehouse insurance. In that case, there is protection the moment the goods are transported from the exporter's warehouse until it reaches the importer's warehouse. So these are some of the documents that you will see whenever you are trading globally. Now, with the COVID situation, what we have seen is there is a shift from paper to paperless. The trading is now done mostly paperless. There is a requirement for e-documents, or soft copies are now used during this pandemic situations. So now we need to be very careful that the document, it may include an electronic record, and there will be a place for presentation that can be an electronic address. So you can give a hyperlink, but make sure that this hyperlink is working, and signature can be as an electronic signature. The documents can be presented in any format, but make sure that the format that I'm presenting is it's non-corrupted. Sometimes, in some cases, if they are corrupted and the authority couldn't open it, they may not intimate you also. So make sure that the format, what they have asked for, in the same format you are submitting your documents. Then in the case of electronic document, if you there is no issues with the original and copies, one electronic record will suffice. So these are the changes that we have seen in the pandemic situations. This information, the International Chamber of Commerce have developed a new kind of, they have provided this information to the bankers all over the world, and the bankers are looking at these details when after this pandemics, when it became very difficult for the banks to get hold of paper documents. Okay, so make sure that you follow these guidelines when you are submitting the documents electronically. Now, see, as we said earlier, domestic trade is risk-free, but when it comes to international trade, there are a lot of risks. But if you, along with the risk, because risk and return has got a positive relationship, higher the risk, higher the returns. So if you want to get high returns, you need to go for international trading, because your domestic market can anytime get saturated. So if you want to go beyond your domestic market, you need to have proper planning. So there are so many financing facilities available whenever you are going for international trade. Basically, the financing available for both the exporters and importers are classified as traditional financing and supply chain financing. The traditional financing are letters of credit, letters of guarantees, etc. But the new method is the structured trade financing. So the banks all over the world are providing a lot of facilities nowadays in order to make international trade attractive for the traders. Because international trade, the payment can happen in many ways. Many a times the exporters and the importers agree on open account. If you look at the world statistics, more than 80% of the transactions are done through open account. What is open account transaction? In open account, the exporter ships the goods. Along with the goods, he is shipping the documents also. Then the importer receives the goods, and he will pay the exporter based on what they have agreed in their sales contract. So I call it normally open account as charity. because you are sending the goods. You may get paid, you may not get paid, right? Maybe the exporter, the importer, after receiving the goods, he changed his mind and, he said, I'm sorry, I don't want the goods. Any litigations, let's meet in the court. So your goods will be lying on a foreign port. So there are so many disadvantages, or the exporter is at the receiving end when we agree on an open account transactions. So in the world market, almost 80% of the transactions are done through open account. So that tells us how depressing situation is for the exporters. So the banks all over the world have come up with some new methods, thereby they are making the open account very attractive for the exporters. So they are calling it as structured trade financing or structured financing. So they provide facilities to the exporters like invoice discounting, the bills discounting. They provide factoring. Many of the international banks are providing factoring facilities. They also provide forfeiting facilities. And so some of them combine all of this and provide the exporter structured trade financing facility. So thereby, the banks are trying to help the exporters. What is the interest of banks in this type of financing? It's an off-balance sheet income for the banks, so it gives them a cushion. So they are very much interested in such structured trade financing. So even if you have agreed on an open account transaction, make sure that you meet your banker and discuss with him what options are available for you, whether the bank will be ready to discount your invoice, or whether the bank will discount your bills of exchange, or the bank will provide you an account receivable service by combining invoice discounting, bills discounting in one package as factoring facility. Normally, if the trading is for longer period, they can go for forfeiting facilities also. But forfeiting is normally given for big businesses. But when I'm explaining this, some of the small and medium enterprises may be thinking like, okay, these facilities are for the global businesses only. No, many of the banks have created, or they have structured their financing targeting the SMEs, targeting SMEs. So the factoring is primarily provided for the SMEs. But if you do not want any of this, or sometimes a scenario happens, like for example, if you are trading with the Chinese customers, they will tell you that I would like to have a letters of credit. So you have to go for letters of credit. Letters of credit is a fantastic solution, because the benefits and demerits of letters of credit are equal for the exporter and the importer. So if in a risk spectrum, if I put all of these financing methods, letters of credit will come in the middle, because they are useful, suitable for both the exporters and the importers. So you can avail letters of credit facilities, you can avail letters of guarantees facilities also. And nowadays, banks are even helping the exporters and importers. They are encouraging them to involve in blockchains in trade financing. With the digital transformation, blockchains are also introduced. You must have read in news that HSBC and Stanchart has recently concluded a blockchain in trade financing. So there are a number of facilities available. So it's up to the traders. I see many a times what happens, the businesses, they are unaware about these facilities. Many a times when I have trained the exporters in Bahrain, they have told me, oh, these facilities are there, we are unaware of it. Yeah, letters of credit, no, it's for big businesses only. No, they are not for big businesses. Even for small businesses, letters of credit can be used, but there are bank charges. So you need to make an analysis. Okay, what is the perceivable risk in this trade transaction? I have to pay a lot of charges to the bank. Is it kind of, compensated? What will be the net of? You need to make a trade-off analysis. Then only you will know, okay, I can go for letters of credit for this deal, or I will be happy with an open account transaction. If you are in a good bargaining position, you can ask as an exporter for cash in advance. What is cash in advance? Cash in advance is the exporter tells the importer that you pay me, then only I will even start the production. Forget about sending the goods to you. So cash in advance is the exporter is in a very advantageous position. All the risks are shifted to the importer. But unfortunately, in the world market, only 5% of the transactions are done through cash in advance. So advance payment is not an option. So even if it is an open account transaction, you can go for, if you don't want letters of credit, if you feel that there are a lot of banks involved and a lot of charges are there, ask for standby LCs. You can ask for standby LCs or some types of financial guarantees. You can kind of, these facilities are available for you. So you need to understand these facilities and use it appropriately whenever you are trading with the foreign companies. So as I said, there are a lot of export insurance is very, very important. There are different types of insurance that you can take. If you look at in Bahrain, the export Bahrain is providing 90% protection to your export credit insurance is available. So there is credit insurance, there is commercial credit insurance, and there is sovereign insurance also. Sometimes what happens, after a while, the exporter, the importer, or the country, the importing country says that we are repudiating. Repudiating means we are canceling the contract. Already you have completed your production. So there are insurance which covers such sovereign risks also. So you need to understand which insurance is apt for you, and you need to take appropriate policies. Trade maps, ITC, the International Trade Center, has got trade map analysis. See, this is the most recent one which I have gathered from the ITC's website. So when you go to ITC, you have got a lot of information about the potential export markets and where you can export your products. This is a snapshot of Bahrain's exports, like, in the year 2019, which countries Bahrain has exported, what are the prime products that Bahrain is exporting. So you have all these information available in the trade map. Apart from that, the Bahrain government has created a liquidity support fund with the three major banks in Bahrain, BBK, NBB, BDB, and I think BISB is also included in that, in order to provide the liquidity support because liquidity risk is the major risk confronted by the SMEs, especially. What is liquidity risk? You have assets, but you can't convert them into cash. So your liquidity risks can be sometimes short-term, or it can be long-term also. So the government has come up with so many financial support facilities through this liquidity support fund. So for that, there are some requirements. The ownership of the company, more than 51% should be owned by a Bahraini, and your minimum a yearly turnover should be 3 million and above. There are so many requirements, so you need to look at them, and you can find appropriate financing also. So if you go to the ITC's market analysis tool, you will get information about the trade map, market access map. It gives you a lot of information about the trade competitiveness. Trade competitiveness it will give you information about the tariff rates, quotas, embargo in some countries. There is a complete ban that's called embargo for certain products. So you have all these information, sustainability mark, what are the products which are protected in some countries. So if you export those products, there's not going to be a market for you. So what are the sustainability factors? You need to look at it. So all of this will help you to increase your success in the international trade. So as a trade specialist, I believe the future of the trading is going to change in the post-COVID. What I'm expecting based on my research is that there are going to be a lot of non-bank facilities are going to be there. Apart from banks, non-banking intermediaries will also going to involve in financing. So the trade transaction for a foreseeable future, it will be in the e-platforms. There will be private escrow services would be there. There will be a lot of, e-documentation, electronic records will be used. Papers, people will be hesitant to use paper documents. The mode of transport also, or the transport documents also, the research shows that there's going to be a shift from negotiable to non-negotiable, and there's going to be a fall in the export negotiation fees, and the research conducted by ICC and many of the international bodies, they are pointing towards, there will be a fall in the 5-day export payments period. It may be reduced to 2-day because there is a liquidity crunch happening. So in order to revive the market, these are the requirements. And many of the trade specialists are believing that there are going to be an increase in the use of documentary collections, and fintech would be there, where the transfer can happen within minutes. So these are the changes that you may see post-COVID time, which are very welcoming changes. This is the need for the hour. So with that, we have come to the end of our webinar. Whatever I have discussed with you, it is just a tip of the iceberg. I can talk hours and hours on each of them. For example, letters of credit, if you give me a chance, I will speak for 3 days, R&D, documentation, financing, all of this. So this is just a tip of the iceberg. So I'm more than happy to take if you have any questions.
Right. Thank you so much, Dr. Chitra, for this very interesting presentation. Well, I hope everyone learned as much as I did and enjoyed this webinar. Before we move to the questions and answers session, let me highlight something that Dr. Chitra mentioned. It's the role of the chambers in providing assistance with regard to entering foreign markets and commencing on international trade. I would like to stress the role of the Bahrain Chamber and the readiness to welcome you all and provide assistance with regard to international trade. We have our international relations department. We have our legal department, and as well as the client care department ready to assist you. Now we will move, we have a few questions in the chat. Here we have a question about HS codes, how to get the HS codes.
The health and security codes?
Yes.
Yeah, it depends, from which authority the client has asked you to provide. So you need to get the certificates from that bodies. Many times, there are specific authorities who are entrusted with the task of issuing these certificates. So it will be included in the sales contract. So you need to look at your sales contract. At the sales contracting time itself, you need to understand what are the health and safety requirements.
Yes. Or could it be the HS codes for tariffs? I think the person means that.
Tariffs?
Yes.
Yeah, tariff rules. Yeah, in that case, normally the health and safety, security codes, are very much used in the manufacturing. That's what I have seen in the documentation. So if it is tariffs, the tariffs rates are different for countries. So ITC's website, it's a very, very useful resource. You can go to the ITC websites. I have used the international trade centers, I have used their website, and I have got a lot of information on their tariff rates from them.
Yes. Maybe I can add something to what you said. The website of the Customs Affair has a tariff finder search engine, so that can also be useful.
Right.
We have another question here in the chat. It says, how far would Bahrain adopt the blockchain platform, especially in the post-COVID trade scenario?
Yeah, I think it's going to be a change that we will see. Many of the bankers, recently I got some queries from many of the bankers in Bahrain. They are showing interest in blockchain technology because it's going to be the era of paperless, documents. We have enough with the documents. So there will definitely be a market for blockchain. I'm sure the banks will reciprocate. I'm very sure about this. Banks have shown already, if I'm not mistaken, Stanchart and Citibank and HSBC have already completed blockchain transactions in trade finance.
Yes. I don't know if we have more questions. Would anybody like to address his or her question directly to Dr. Chitra? Please raise your hand if you wish. I don't think we have questions. So we don't have any more questions. With this much, we conclude today's webinar. I would like to thank you all for joining us today, and special thanks to Dr. Chitra from Bahrain. BIBF, that's easier to say. Thank you so much, and we'll see you in our next events. Thank you.
Thank you, Aisha. It's our pleasure.
Thank you so much.